Good afternoon. Can you hear me? One, two, can you hear me? Quick sound check. Can you guys hear me? No idea. Can't hear you. Now? Okay. Yeah, I can hear you now. Okay, perfect. Brilliant. How are you? Not too bad. Can you guys hear me? No idea. Can't hear you. Now? Okay. Yeah, I can hear you now. Okay, perfect. No. That's strange. Let me play around with the sound. Can someone speak now? No, can't hear you. How about now? No. Yeah, I can hear now. Hello? Yeah, speak now. Now? No, can't hear you. Strange. No idea what's happening. Yeah, I can hear now. Yeah, I can hear. Brilliant. Good. Well, can't do anything with it. Thank you. Well, I don't know what's happening. Can you speak now? Let's try again. Yeah. Yeah, should be fine now. Hello? Yes. Can you hear me? Brilliant. Fine now. Hello? Yes. Can you hear me? I can hear some echo in my voice. Can you hear the same? No? Oh. Okay. Thank you for saying that, Alvin. It's very kind. Okay. NFP day. We haven't had NFP for 2 months. Today, the BLS has been released NFP data for September. the data for NFP on September. And you can see that the forecast is set to be 55,000. $53,000 to be exact. Brilliant. Okay. Yes. So these are the yields today. You can see that yields are moving pretty much sideways, gravitating between 3% and 4%, 3% and 5% for the last 3 years. Yeah, 3.5 years. So gravitating between 3 and 4%, 3 and 5% for the last 3 years. It's all over the place, but of course it perfectly represents that how volatile markets are. If someone tells you that they know what's happening in next month, they are lying. So long-term forecasts, I think, are broken since COVID, which was one of the greatest examples that we saw that anything is possible. For example, the global pandemic. Now this chart perfectly represents that how cyclical the markets are. Sometimes up, sometimes down. So today we are going to live trade the NFP. Now NFP is going to be a surprise today because we haven't had it for 2 months. And the September one wasn't released when it should have been released. So it's definitely going to be a surprise. Now the question is that how much is the number going to be? What the number is actually going to be. Yesterday we have had FOMC meeting minutes, and it was a surprise for me. Obviously, in my interpretation, it was a dovish hold, but according to the market, it was a hawkish hold. So I misread something in the document, but in my opinion, just I think it was dovish. They said FOMC members quoted the same things as, for example, the labor market is deteriorating, so the situation is getting worse and worse. Inflation somehow reduced, so it's not an issue anymore. The Fed is really focusing on labor market. Oh God! After lunch, I was so sleepy. Those of you who never traded NFP before, this is one of the most volatile and most sought data among traders. And there's really 2 ways. So the market can go up and the market can go down. So in case if we have a low NFP number, gold can and possibly will break above $4,100. But if we have a very strong NFP number, that's going to be highly inflationary and is going to reiterate the Fed's message from the FOMC minutes yesterday. In that scenario, we are going to see gold plummeting down well below 4,000. Which one is going to be? We don't know yet, but one thing I can tell you for sure is first we have to look at the yields, and the yields are elevating since yesterday. They went up from 3.4 all the way to 3.6, a 0.2 basis point increase, and currently price is massaging the daily and the weekly pivots. It is moving sideways in the last 2 weeks, or the last 1 week to be exact. Yes, perfectly. Was last 1 week. Which one is going to be up or down? Data will tell. But it's very choppy market. And let me just put some music on for you. You can no. I think it's going to be sufficiently strong enough to move the market. That was yesterday. Yeah, but as I mentioned yesterday, you can't celebrate the greatness of man within 1 day. That's why we don't have a Men's Day, because the whole year is Men's Day. Yeah, you can't celebrate the greatness of our greatness in 1 day. Yeah. Sia on YouTube is asking, what do you think will be, buy or sell? Junior Funny One, are we buying? No stop loss needed today. No, never use a stop loss. Stop loss is the weapon of the week. But since we're talking about entries, I think it's time to do a front running position. So let's go for a little bit of on YouTube. We will be back in a minute. And there you go. Here's your entry. And the take profit is obviously the previous high, previous low, as we discussed. If it gets stopped out, if you look at TradingView, because we have a very wide zone between the daily and the weekly pivot at 4,088, at 4,112, so that's $30. It's very wide, 300 pips. Someone says my microphone volume is very low. What do you mean it's low? I think it's perfect. 1 2 1 2 1 2 1 1 1 1 2 1 million 2 million 3 million. Can you hear me now? Okay, 19 minutes until NFP. So exciting. Last night FOMC pulled down my pants. That wasn't nice, was it? Yep. I hope my... Hello, Mario. How was you? Yeah, a minus 3,000 something. So gave back all the profits from yesterday. It is what it is, isn't it? 11 weeks straight profits, and I think I'm losing my mojo. Either way, we get drunk. Yeah. Palinka, neighboring countries has Slivovica, Rakia, yeah. But Palinka is the best. All the other ones are just, copies. Wannabe copies. Boo. Tony, you echoing very badly. That's okay. Let's see. So that was the latest entry, front running position. It is very risky because obviously you know that the daily and the weekly pivots are very closely aligned. That said, $30 difference between the two, but it's wide enough to screw up my stop loss if I put down any. So my stop loss, I have to break my rule and go slightly higher than my maximum allowed loss. So yeah, I just put the stop loss above the previous high, or the previous high. Yes, 15 minutes. We're going to see the NFP for September. Yes. Yeah. It depends how low. It's like... It should, yes. if it's negative, so it's lower than zero, and it's very bad, the chances are 50-50 that price either going to skyrocket because the fear of recession, or it's going to plummet because if data is, oh no, yeah, that's gonna go up, yeah. Really? What type of investments? Is the Facebook? Yeah, yeah. That's the Trump administration's bring home production, right? But yeah, yeah. But you know what's the problem with that, Don? Americans, no, Americans, they love to use iPhones, but they don't want to put them together. That's the problem. Um, but but I'm pretty sure many people would be happy to take any job in the U.S. right now. It's not just the U.S. actually. From close friends and family, we have these discussions, and actually, we have several larger businesses around us, neighboring cities or villages, and they're all letting people go. So it's not just an American problem; it's a worldwide problem that jobs are becoming more difficult to get, and also to get the right people. Yep, yeah. If America farts, the whole world shits themselves. Sometimes, yeah. No, that's his accent. Sorry, Anna. Mm-hmm. Too experienced, isn't it? They're afraid of the experience. But on the other hand, you hear that companies don't want to hire too young people. So it's yeah, but currently the expectation of employers, they're looking for someone who is between 25 and 35, speaks 4 languages, has 6 Olympic gold medals, can do a job of 3 people. So it's just ridiculous. And I oh yeah. Exactly. Well, anyway, the job market has never been easy, but oh no, that's bullshit. The my our parents' generation, when they grew up, literally you could get a job on Wall Street with an average school degree or results, but it's becoming more difficult and difficult. Um, and what Dawn just explained, I see the same things in the labor market. That the U.S. is really tough now, and I hope the situation will become better. But how is this affects our work? If the labor market deteriorates, it will go downhill very, very fast. So it's not like a gradual thing. Usually it deteriorates very fast. And the Fed needs to do something. They need to cut interest rate. But yesterday, the FOMC meeting minutes was very clear that because they had no data, they have no plan to do anything. And I think because of that 42 days blackout, we're going to see bad data, and we're going to see awfully bad data within a few weeks. And I think that's when the shit hits the fan. That's my personal opinion. So I think that 1 month is going to be enough just to cause a massive sell-off in the markets. Today, I say I'm expecting gold to go down, so we're going to see a temporarily good data. So when you look at the previous NFP data, if you look at my browser, you can see that the last one was 22,000. The forecast is now 53. I believe we're going to see a higher number today, which could push down gold, and it's going to reiterate the message of the Fed from yesterday, or the FOMC, that yes, they're not going to cut interest rate because no reason. But then in a few weeks, a few months' time, we're going to see ridiculously bad employment data in the US. Like bad you never seen for years, excluding COVID, of course. So my forecast today on NFP is sell the news and buy the fact, maybe. Who knows? But depending on the data, if we have a low NFP number, that's going to strengthen the argument of the Fed that there's no point to cut interest rate first because, the labor market, even though it's not doing too well, a low NFP is going to push gold higher. But if we have a high NFP, like anything above 50,000 or 53,000, that's going to push down gold. So these are the two options, up or down. Surprise. Awfully difficult after yesterday's FOMC. And of course the blockbuster earnings of Nvidia, which was ridiculous. And we got 6 minutes, 5 minutes and 10 seconds. And I think this is it for the whole week. A magic TikTok star, show me, Tomasz, entry. My entry price is 4,087.60. It's literally on the screen. Exactly, I entered exactly there. The current price. Oh, someone is asking, Don, have you tried OnlyFans? Apparently it's very popular. And also you got another comment, you don't look 66. OnlyFans. Apologies, someone just being very funny. And also you got a comment from Maria, you look really good for 66. That was in our Zoom chat. 3 minutes and 30 seconds until the next NFP data, which will be for September. It's okay, Maria. I have a 3-year-old as well. Duct tape. 3 minutes and 10 seconds. What do you think NFP is going to be? Negative, positive, in line with the forecast? Shout out some numbers. Let's make a bet. Whoever gets closest to the actual data will get a pizza from me. $216,000. Wow, that's an extreme. I think it's going to be in line with the forecast, so somewhere between 45 and 60,000. Yeah, I have two guesses. One of them is negative 10, 12,000. The other one is between 45 and 60. We got 2 minutes, ladies and gentlemen. Get your credit cards ready. We are about to get slammed. One minute and 40 seconds until NFP. This is my open position. I opted for a sell today, but honestly it's 50-50%. It's very difficult to forecast the market right now. Labor market is in an absolute bad state. The Fed yesterday communicated that they're not willing to cut interest rate because they were flying blind for 42 days while there was no data because the government was shut down. Okay, bets in YouTube chat coming in. 50k, 90k, 80k, 55, 24k. No negative. No one said a negative number. "46 seconds. Junior Fun is asking sell or buy. Do both, brother. Do both. No, don't do it. Don't do it. Don't do hedging. It's not hedging in retail trading. It's suicide. 20 seconds to go, ladies and gentlemen. We got 15. Remember, bad data and good data. 8, 7, 6, 5, 4, 3, 2, and 1. And the data should be out. Oh, whoa, go in. Full margin sell, full margin sell. I'm jumping in a full margin sell. This is not financial advice, but I'm jumping in. Look at that. 119,000. That's very positive number. And that strengthens the argument for the Fed that they did the right thing to not cut interest rates in December. There you go, 160 pips profit immediately. Data is out. 119,000. That should be enough. What is the... Do we have unemployment data today? Unemployment rate is... Whoa. Oh, it's increased. Now that's counterproductive, guys. So we get the mixed data. Mixed data. Private non-farm payrolls increased. Unemployment increased. Average hourly earnings. Why is gold pushing up? One thing. Pardon? That's very mixed data. But I would put the emphasis and focus on non-farm payrolls. still. Minus 15. Minus 4, yeah. So from 22,000 to minus 4, right? Actually, the labor market is stronger than we thought before. Headlines are coming in. I think it's strong enough data, high enough data to push down gold, but apparently gold is now moving sideways. The only thing that worries me is the increased unemployment. No reaction. There was a sell-off, immediate reaction, but now it's back to square one. I missed those old days when data was out, you placed your bet and boom, hundreds of pips profit, but now it's just moving sideways. Financial Times, here it is. US economy adds 119,000 jobs in surprise September rebound. Figure complicates Fed decision on rates next month. Yeah. However, I still see as a sell on gold after yesterday's FOMC. So I added 2 sells. You can see it on the screen and I'm going to hold it. This is a strong enough data, even though unemployment has increased. So I'm going to hold the 2 sells. And now one position is at 100 pips or 80 pips and the other one is gravitating between around 0. NASDAQ is pumping. Yeah, it's good for stocks, good for indices. But it's better for US 30. Indices, I think they're going to pump. Maybe that's the reason why currently we don't see that NASDAQ major push down on gold. Good for stocks, good for indices. Maybe that's why we don't see gold pushing down aggressively. No, we should. Sorry, I said it wrong. We should see gold pushing down if there's a risk on mode in the market. Risk on sentiment. Okay, 5 minutes into the data and not much happened. Bit of a wiggle, but price is still where it was. Unfortunately, this is beyond me. And those of you who would like to join the AlphaFX community, you can go to the AlphaFX website to purchase a membership. But due to Black Friday, Currently, there is a discount for lifetime memberships. You can join the membership for £399 for lifetime. This is a one-time payment. One payment, no monthly fees, and you're set for lifetime. And there's only 2 membership left at this price, because yesterday or this week 2 or 3 people joined the academy. So once it's sold out, the price will go back to the original £599. Let's have a look on the open position, and it's not doing anything. Outrageous. Who knows the reason why gold isn't dumping? But that wasn't that significant, was it? Ooh. Hold on. Yeah. Initial jobless claims 229. It's slight increase, so it's only a marginal increase. In my interpretation, this is bearish for gold, but who am I to tell? Yeah. No, it's the reason why it's yields are going down, and hence gold is pushing higher. So I have to let this position go, both of the positions. If yields continue to drop because of the good data, there's no reason for the Fed to... Hold on. Is there a reason for the Fed to cut interest rate? Yes, good data means the Fed has a reason to cut interest rate, right? Because the German market... Okay, I screwed this one up, unfortunately, because the data wasn't high enough to push down price on gold, but it's high enough for an interest rate cut. So now I'm going to have to reverse the position. But it's not going up either that much. Okay, looking at the data again. So data was 116,000, which was good. There's no reason for the Fed to hold interest rate. Therefore, yields are pushing lower and gold is pushing higher. Okay, entering into a buy, reversing my position based on this one. I screwed up the fundamental thinking. And now just reversing into buy. The target, first one is always the previous high. But I'm going to target 4,130. Yes, it's for buys. I made a mistake, and when I was talking through the macro, the dynamics behind and the reasoning behind interest rate cuts, I ignored something and I paid a price. Because I was focusing, I was fixated on the higher jobs data, thinking that the Fed is going to increase interest rate, but no, it wasn't the case. So they have to cut interest rate because I'm confused now. No, yeah. I fall into my own trap, thinking too much. NFP was high enough, so let's think it through again. So NFP was high enough, which means the Fed was right not to cut interest rate. Honestly, I can't think. My brain is just melted. My yeah. So it's the debate. It's the ever pressuring debate of the central bank, because the Fed has a dual mandate: price stability and full employment. But we can take price stability out of the picture, because even the FOMC minutes yesterday clearly said that inflation is fine at 3%. They pretty much got used to it. Markets is accommodated to that. And yesterday the Fed communication was that because of the data blackout, they don't want to rush into an interest rate cut. And therefore gold started dropping yesterday after 1 hour. But today, because we had a good data, it slightly cancelled out yesterday's meeting minutes, in my opinion. But I think the market is around really confused whether the Fed is going to hold the dovish hold, as said in the FOMC meeting minutes, or is this one-time data of 119,000 going to be enough to cancel out? And I think this is the dilemma that every trader is now facing. This is the dilemma that's causing price to just move sideways and wiping out both buyers and sellers. Yeah, from that perspective, the data was very mixed, because unemployment have increased, but the job market printed a very solid and very healthy number. It's just the uncertainty. I think the market is hesitating. Very, very bad NFP. Contradicting. No, I'm out. I'm out, and I'm not trading anymore today. Yesterday losses, this morning losses, now losses on NFP. I think the 11-week straight winning streak is now over. And you can see that gold is moving sideways until New York Open. Bad data. Okay, guys, I'm gonna call it a day because price is moving sideways, as you can see on the screen. It's printing a barcode right now. Of course, it will definitely break out into one direction. Which one is it going to be? Well, I'm asking the same question. On one hand, the good data, the strong data, strengthens the argument for the Fed to cut interest rate, or to hold interest rates, sorry, so that should push down gold. On the other hand, the increasing unemployment is screaming for an interest rate cut. So which one is going to be what the focus is on, unemployment or job creation? And I think that's the market, why it's very indecisive and confused. So am I. Well, guys, after 11 weeks, losses have started to come in. Thank you so much. I won't be placing another trade because if you look at TradingView, you can see that price hasn't moved too much in the last 45 minutes since the data came out on NFP. It's moving in a range between 4,100 and 4,070. Where is it going to break out? It will be depending on New York. So good luck. I'm out. Bye. And those of you who would like to join the Alpha FX community, there is a discount link in YouTube chat. I'm going to pin it to the top. You can join for a lifetime fee of £399. There's only 2 memberships available because 3 or 4 people joined this week, and the last 2 I want to share with you. So the YouTube link is in the discount link is in the YouTube chat. Once it's gone, price will go up to £699. So the difference is £300. If you want to grab the discount, make sure that you take advantage of the discount link. Thank you so much, guys. This is the Alpha FX.